What's up guys, welcome back to the channel. If your charts look like this, there's something wrong with you. Seriously, there's no way you can make a decision where you're gonna enter if you've got so much of indicators. I need you to understand how price moves, how price works, and where you can actually take positions. So in this video, I'll show you how to do it all. Without wasting your time, let's get into the charts. First thing I want you to do is just get rid of all this noise, okay? You don't need EMAs, you don't need average true range to know where your stop loss is gonna be. Don't need any of this bullshit, okay? Now, this works on everything. It works on Forex, it works on stocks, it works on indices. The first thing I want you to do is go on either 4-hour or daily chart because those are the bigger time frames where you actually know what the price is doing. This is Australian New Zealand dollar. I live in Australia, so I like to trade everything that Australian dollar involves, right? So I'm just going to mark all these levels with this horizontal line. There's also a tool on this side. I've just got some favorite buttons here, so it's just going to be easier for me to show it to you. These are all also known as support and resistance zone. You don't need to make a lot of those. I'm just showing you to demonstrate to you, but you need to make close to where the price is. So all these areas where it has rejected, I want you to draw horizontal lines. This is going to be your support and resistance, or also known as horizontal line. So you've marked your support and resistance on a higher time frame. What I want you to do next is try to just use your eyeballs and see what the price is doing, okay? So the price is continuously was going up and then started rejecting at this point. Let's say you're watching chart at this point. You don't have any business to what it's done before. You want to know what it's going to do now. So we come on this side, okay? Now at these points, to make your life easier, I want you to start understanding how naked trading works. This is just you watching price. When I say you watching price, what I mean by that is there's only three things that a price action on a naked chart demonstrate. One, where the buyers are and where the sellers are. The zones that you're going to be marking is also known as supply and demand zone. When you're trading naked charts, when you're trading just price action, I want you to draw support and resistance or supply and demand or order blocks. They're the same thing. You are trading market structure. You need to understand what market structure is. If you don't understand market structure, you need to keep learning without risking your money in the market already. I'm going to try to show you and teach you as much as I can. Those of you who are completely new to this, I want you guys to put an indicator. It's called RSI. I want you guys to change these settings completely and remove all of this noise because this is not helpful. You can change the color because I like this color because I'm a blind man. Again, I'm just going to make everything this big color. So you've changed all the settings on the RSI. You've just gone click. Now, this is what your chart's looking like. It's a bit confusing. I know you're like, oh my God, it's so many lines. Wait a minute, I'll explain it to you. I want you to draw a nice trend line on all the tops where the price has rejected. I want you guys to stay away from the points where the price is far away from that trend line. Your best point to enter is going to be closest to that trend line zone. So for example, this price, there's going to be people who are going to use a bunch of indicators and try to short this market here. I can almost guarantee you that the price is going to go probably this and come back up, getting all their stop loss from this point. So I want you guys to stay and watch for price to come as close to the trend line. If you can get a spot where you can get a trend line and also a resistance zone and you see a rejection there, that is where I want you guys to take entries. This is a downtrend going on. So we are looking for downtrend patterns. What are those? You're looking for double tops, you're looking for RSI momentum divergence, and you're looking for price action that tells you that sellers are in control or the buyers are in control. For example, this area we are in a trading range in this zone here, right? You can also make some nice trades by just knowing that this is a trading range. So every time the price comes in the trading range area and close to the trend line, you're getting ready to short that position. Also knowing that this is a 1 hour chart, by the way. So you can see that there is a slight divergence here, right? These are going to be a best place to take entry points. If you're going to do the counter trend, you're looking for the same things. So for example, right here, there is a RSI divergence happening, right? If you come here, the price is making lower low, but the RSI is going up, showing that the momentum is slowing down. We don't know if it's slowed down completely and it's just gonna fly up from here, or it's gonna come back here, grab the liquidity from this point and then go up. Remember, most of you guys will fail at trading because you don't have patience to enter the trade. You want that fast money, and that's why you're not able to think correctly and enter after looking at this. You've seen so many charts, you've done your analysis, but you're still not able to get to a position where you just can call yourself profitable. What's the reason for that? I want you guys to step away from the charts and think for once. If there's so many strategies out there and everybody is relying on strategy, doesn't that tell us that everybody should be successful? But it's just not that way in trading. Most of the people lose money, it's because they're looking for best strategy instead of looking inside and thinking, what am I doing wrong? And it's the same thing over and over again. You're either entering at wrong places, you don't have nice risk management system in place, or you're just over leveraging and doing revenge trading because the market took away your money. With this thing, you're trying to read the price action and trying to predict where the sellers are going to come in or where the buyers are going to come in. You can use few tools to help you out, but eventually it's still going to depend how much risk you're willing to take and what are your entry points. So I don't even need RSI to tell you this, but look at this. If you just saw this whole area, knowing that it's going to come here. So I want you guys to understand three things. You saw this candle going down. If you actually took this position, you're going to get stopped out right here because the price came up and got that liquidity. It's just above that zone. I hope you can see it. The system is designed in a way for you to lose over and over and over again. I want you guys to work on something bigger than technical analysis. I want you guys to start working on your emotions. I want you guys to get rid of that fear of missing out on trades. So you see the price coming down at this point, right? Let's say you're here when you enter that trade when I showed it to you, this one. You're just seeing this candle and you're like, oh, it's just gonna go down. It just doesn't go down like that. For price to go down that much, it needs liquidity. It needs people who are either buying it or selling it. You are not able to move the markets with your small account. Institutional traders are the one who are going to move the account, and they will always need that liquidity above those areas where you have entered. So for example, if you'd enter here, you got stopped out because the liquidity needed your positions, because the institutional trader needed this liquidity to get into their positions. I want you guys to start thinking as if you yourself are an institution. You yourself, let's say, own a bank or a hedge fund or forex exchange that deals with currencies all the time, and you want to get that best price. Next time you're entering a trade, I want you to stop, take a step away and see, am I going to be a part of liquidity grab? Now, this is a 1 hour chart. It's going to take some time to get that liquidity zone, and you might be able to get small scalps out of it. But scalping will not make you money, guys. The positional trading is the only thing that's going to make you money. I can assure you that. Anyone that's telling you you can make money scalping is either selling you their course to you, or just doing it for the views on YouTube. Do not fall for that crap. Learn how to trade by watching the charts, and when you spend so many hours seeing the price action, doing the naked charts, you'll be able to tell, what am I doing wrong? Write it down and work on those things. Price will always come and grab your stop loss, but we still don't learn because we are humans and we are creature of habits. I want you guys to work on those habits and think before you take a position. Now, as I said, I want you guys to enter close to the trend lines, and once you're in profit, I want you guys move your stop loss to 0, so that even if after doing that it still comes up and grabs your liquidity from this point, you're not losing a lot of money. You can control a few things in this, which is keeping your stop loss as minimum as you can and trying to get these big moves. That's your job as a trader. You want to enter at the right places. I've showed you some tricks how to enter right places using just price action and naked charts. You can use these few tools if you'd like to. If you don't want to, that's completely fine. If you just think that you can watch the price and do that, good for you. Personally, for me, I need an RSI because that way I can tell what areas the momentum is slowing down. So for example, at this point, this is a 1 hour chart. The price came at this zone, came back up to retest it, failed it. This is a double top right here on a smaller time frame, right? And there's a divergence here. With that candle, you can enter the position. But remember, with 1 hour, the chances of you getting the whole trend is going to be small. You've got 6 pips as your stop loss and about 1:3 risk-reward ratio according to a normal trader. That's 20 pips. If this works for you, good for you. Me, I like to take big trades. I don't get 20 pip position and get happy with it. I want bigger trades. I want bigger take profit zones, and I'm willing to risk small stop losses again and again to be part of those bigger trades, because I know that's how I became profitable. So every time price comes to these areas on a bigger time frame, like a 4 hour, I know that institutional players are getting ready for this, okay? So for example, here, this is a double top again on a 4 hour chart. Price came up, trapped some people, and then went back down. I want you guys to learn how to see these things so that you're part of these big moves. And once you're part of these big moves, don't take profit. Stay in the trade, because that's what's going to make you money. Matter of fact, if you can, once you're part of these trades, I want you guys to add to your positions. Once you see the market structure being respected, I want you guys to take positions and grow them. So add to your position at this point, after you've got this point. Now, at this point, I don't think this is a nice entry point. This is 6th June, 11 a.m. Australian time. We are completely in oversold category on RSI. There is some news events that's going to happen, which is today, Balance of Trade Australia, and NAB confidence, which is on 11th of June. I'm sure there's going to be more events which will impact the price, but I am interested in entering in this area, because at this area, it will also mean I'm not entering the price when the price is extended. I want to get on the top of that structure. Once I've gotten that, I want it to continue down, respecting the structure. Now, another thing that is important about all the technicals is you don't know what's going to happen. You're just guessing, you're predicting what's going to happen. And you're using money management in your favor to make you money. For example, if you, let's say, wait for the price to come at this point and take an entry at this point. I'm going to delete this so that you can see it. So let's say the price is coming up at this point and you're like, okay, and it started rejecting, right? At this point, you're going to enter a short position, okay? Once you see a red candle, once you see a rejection, once you see that, yes, the liquidity is being grabbed out from this area, okay? So there's going to be a wick here and then the candle, and then you'll probably be like, okay, cool, this is my entry, I'm going to enter. I want you guys to keep your stop loss on the ass end of that candle. And I want you guys to leave the profits. Don't take the profits. To take the profits, look outside, zoom out, see what's the next area where the price can go and grab the liquidity. So according to me, this area, the price should come down on the bigger time frame. Now it's going to take you a long time to do this, okay? Now this is another basic of price action or the naked trading concept. You're trying to see where the buyers are and where the sellers are and who's in control. So this is on a 4-hour chart, right? Every time you see the price is going to do one of these three things. One, it's going to be in a downtrend. Second, it's going to be in an upward trend. Or third, it's going to be in a trading zone like this one. This one is in complete trading zone. So according to the concept of price action, these areas are all the areas where you would be selling or you would be interested to sell. Okay? These are all your sale areas. Once you see rejections at this point, you can enter trades, putting stop loss above and hope for the best. But I recommend you to stay away from sideways market because it will always come up and grab the liquidity and just screw you up completely. You're looking to be part of the trend. Trend is your friend. That's the way you can make money. With the downtrend, you want to enter at these top points according to the market structure. You need to understand how market structure works. The upward trend, these would be the good plays according to the trend lines where you would be entering your trades. Once the trend line is broken, the price is either going to go sideways, go down, or go up. I want you to draw a box here so that you know that this is a dangerous zone. Do not trade that. You see that zone be broken and the price came back up, retested, and went back up again. So there's another small trend that has begun in that zone. Then again, this point, it has broken that trend line. And what happens once the trend line is broken? You're waiting to see if it's going to form a downward trend or going to be in a trading zone. This one, it was a downtrend. So again, take your trend line tool and draw that thing on top of those things. Once you've drawn that trend line, I want you to start looking for entries at the top of those trend line points where you're going to get some nice entry points. This is the place where I want you to keep an eye out. I want you guys to stay away from this zone, which is the extended price. I want you guys to take entries where the price is going to find some resistance with that trend line and also the normal resistance zone. So potentially this one, we're going to wait for price to either come to this point or reject, go in the trading zone here, trading range here, and come back to retest this area and then probably reject. With all of that in mind, you can use RSI to see when it's oversold, when it's overbought, and when it's coming down. So if you go zoom in at this point, you see a trading range being formed. You saw a rejection close to the trend line and a resistance zone, and you're seeing the RSI is going down. So you can take some nice entry. For example, this would be your nice entry point. You can use this indicator called engulfing candles and it'll show you what candle has engulfed the previous candle. So for this one, because we are in a downtrend, we are looking for bearish candles. Once I go zoom into that, this tells me at this point sellers are stronger than the buyers. One more time, RSI is going down. And this candle tells me again that sellers are stronger than buyers. So most likely we're going to go down. You take your short position, place an entry about 20 pips, and then wait for the trend to give you whatever it wants to give you. I want you guys to stop trading 1:2 and go on a higher time frame. This is where you're going to find the trend and be finally profitable. Stop trading 5-minute charts. Go on a higher time frame. Trust me, you'll see the results. This is all very basic things that you can use. Trend lines, support and resistance, some nice entry points, seeing where the RSI is showing loss of momentum and take entry. Another thing that comes down is your risk management. If you're actually smart with trading your own money, if you're actually putting the stop loss, or you're just thinking, nah, it's gonna work out, so I'm just not put any stop loss because I don't want to get stopped out. Don't do that. Your first rule in this should be to preserve your cash so that you're in the game to make some trades. If you're out of the trade game, if you run out of your capital, you cannot trade anymore. So your first goal is to preserve your capital. You need to get right stops. You will get stopped out. That's just how this game works. But you need to know that if you're getting stopped out 30, 40, 50% of the time, but you manage to get these nice big moves and you're able to add to those positions, that is where the game changes. Give it a go. See, do your own analysis and see if it works on whatever you trade. I promise you it works on everything. It works on stocks, it works on indices, it works on currencies, commodities, you name it. Support, resistance, market structure. If you understand these things and you can see where the sellers are coming in, where the buyers are coming in, you've mastered price action strategy. I hope you enjoyed this video and this video was helpful to you. If it was, please leave a like and comment down below and consider subscribing. And I'll see you in the next one.